G'day all, Benny Reese West. Weekly video on uranium. Just have a look at uranium, see what happened this week. A little bit of a fail away from that top area, wasn't it? But I think at the moment we're just sort of looking at some garden variety pullbacks. So with that being said, let's just jump in and see what we can see this week. Now, I'll just start off here by pointing out something that I sort of haven't really paid attention to, but when we go back and look at statistically, I mean, look, yes, we don't have a great sample size here, and the market is going through a lot different dynamics in the last few years than it has in the previous decade. But what we can see is that May is statistically the weakest month of the year for URA, and it will be the same for everything. But what's been quite good about this month is, just get it on there, we're up 11% this month, okay? So we're really sort of bucking the norm. Like you can see all the percentage change. We're usually down in May. It's the worst month. You know, like I said, maybe take it with a grain of salt, but we are down 70% of the time for all the Mays that we can see. But this month we're up. So that in itself is quite bullish, considering that, you know, that the statistical and norms of what happens during this month. So it's kind of interesting, right? Because, like I said, I mean, May's weak, June tends to be weak, but July tends to be good. So I don't know if that's when they start ramping up the buying again, if that's what has happened as a norm. But July is the strongest month and May's the weak month. I think the point I'm trying to make here, I'm not trying to sort of draw too heavier conclusions here, but all I'd say is I'd look at this and go, okay, well, there's plenty of arguments against why this could be relevant, but let's just, it might be a month to just keep the expectations anchored. And I think the fact that we've had such a good month, I mean, there's a few days to go yet, of course, but the fact that we're up 11%, I think that's a positive. I take that as a positive. So just as we move in here to the weekly, and just quickly looking at this Ichimoku, this is kind of nice, right? We've got the TK crossover, so the Tenkan-sen has crossed. Well, it ricocheted off the Kaizen, the slower moving line. So you know, and that's just reflective of, you know, what's happened with price basically over the course of this month. So we were really threatening across where the market went dead flat, but you know, we've been able to push away. And obviously this week we're down just a little bit as we just have shied away from that top that we were looking at last week. But look, all still good. We're still in a trend. Like I said, maybe it could be just the sogginess of the month, you know, which has been bucked, but you know, there's nothing here that's untoward just yet. Now, it's been pointed out, and it's very true. I'm definitely not dismissing this, but we do have some quite sort of stark bear divergence coming in to the market here as we push up to this high. But I would say that yes, that's very true, and I definitely wouldn't be ignoring that. It's something that bears watching. But the other point I'd make about divergence is it can go on for a long time, because if you look at all this is all divergent, right? So look what's happened between the peak of the RSI here, okay, and all the way up here. This rallied, okay. So this was still quite a substantial rally all the way through here as we continued to diverge. Once we got to the top here, I mean, obviously it began to kick in. But the point being is that divergence, I mean, and this is January 21 all the way through to November 21. So the best part of a year this diverged, okay? So you could sort of say that this current divergence, you know, maybe we got the peak here, but, you know, from where we are, this was September 23 to May 24, where we are now. Okay, we are diverging, but the point is that the market can continue to run as we diverge. Okay, you've just got to have a good understanding of how the RSI is put together, and all we're really doing is measuring the relative strength of the up bars against the down bars over the last 14 periods. Okay, so the point being, and the other thing I would look at with this RSI is that we held 40. Okay, so 40 is a bit of a line in the sand for me. When we get below 40, then I'm much more bearish the market, but we're on a big chart here. This is the weekly. So the point is that yes, we are diverging. So yes, in the series that we've got of candles, it means that, and you can see why, right? Because if you look at the 14 candles, if you look at how we got to the peak here, I mean, look at the 14 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, so I had to go one back. But the point is that there's mainly up bars in this run, and that's why the RSI went high, because there's so many up bars. When you start getting big down bars, and this is the point here, this is why we've dragged away, because if you go back 14 bars from where we are now, okay, so back 14 bars, okay, so that's here. You've got this big down bar that's about to drop out of the sample, and you've got this big down bar. Okay, so what I'm saying is, as the market goes on, as these big down bars drop out of the 14 period sample, this is likely to start to turn back up. Okay, because all of a sudden you're taking out the influence. That's a big down candle. Okay, that was down nearly 7% on the week. So that's a big candle to wipe out. Once that gets wiped out, depending, I mean, look, that could be repeated, of course, and then all of a sudden that's not doing that. But it's just understanding how the indicator works. So I'm definitely not dismissing the fact that the power is running out somewhat, but it's always worth going back to look at the candles and the samples and understanding that divergence can run for a long time. So last week we were just sort of sitting here, and I was getting pretty excited about this candle because it was quite constructive, I thought. And if you remember, when I was looking at the market profile side of things, we had big volume done above the level. Now, there was a big options expiry that went on there, so there was some forced buying. But look, I'm still okay with this because there hasn't been follow through. But whether or not this is a failed breakout now remains to be seen. But I would think that the fact that we did so much volume, let's just take this off because you get the point, right? So the fact that I'm still okay with this because the fact that we had this big volume up here, that still worked to remove a fairly good wall of supply, I would have thought. I mean, whoever wanted to sell up here has had a pretty good chance to sell, right? There's been plenty of volume here when this options expiry went through, that if you wanted to unload shares, there was a willing buyer. Okay, so I still think there's a reasonable case that there's been a pretty good chunk of supply removed through here. Okay, now obviously we haven't had the follow through. Okay, so we have on lower volume just slop back down. But just look at the structure of the market. I mean, it's just like we still just got. I mean, this upswing hasn't finished yet. Okay, we're still in the process of putting it in. This looks like it will probably be the pivot. And if this is the pivot, what does that mean? Well, the way I look at it is just that we've got we've got an upswing that went for 24 trading days that rallied 20%, and the last one was 13 trading days and 17%. So we got a bigger upswing than the last one. Okay, so if I see that, I'm like, okay, well, even now it's even to this pivot, it's just about bigger. But all I'm saying is then the next downswing, we just don't want it to be bigger than this. So that was 9 bars and 11%. So there's no reason when I look at this to not think that this will continue to keep swinging on. Okay, that's how I would look at that as it sits. If this starts getting a bit bigger, okay, I'm back revisiting the idea of the trading range. But I think for right now, just keep it simple. What can you see? I can just see a run up here, and then we're going to maybe head back towards this retracement zone. And if we do, and we hold it, what have we got? We've got old resistance, new support, all that being tested. That's not a problem. We can come down here and do this. That's fine. In fact, that's probably what you want. You want the market swinging. You don't want it in a straight line. It's not good. Okay, so this looks healthy to me. I can't see any real problem. The only real problem I would have at this stage, okay, is that yes, there is a chance that this is a fake breakout, a false breakout, and if that is going to be the case, well then you would just expect it sort of just reignites the idea of the trading range, right? That that you're starting to get this sort of thing happening. So that remains an option. It's just drifted for me a little bit because of what happened up here. Okay, so at this point, I was still pretty confident that that's what was going to happen. But at this point, this has just changed my idea a little bit. So look, I think just go off what you can see. And like I said, this is what you can see. Okay, a market swinging away. So I think that's all you've got to concentrate on for now. So when I jump across here to URNM, it's pretty straightforward that it's almost exactly the same deal as URA. Okay, all the same things have happened here. we mightn't have been quite as drastic above the level here in terms of the volume, but obviously that big move in a few of the other ones held it up there, right? So it wasn't as convincing, but we still did volume above the level. I think that's what's important. It's obviously the volume here is not as big, so it is not as constructive, but nonetheless, people looking to sell at this level got their opportunity. Okay, so what I'm saying is, and what I'm thinking is, the next time we push up here, is there going to still be the number of sellers up here that there previously was? I would suggest there isn't, because they had a chance to sell. So unless they want to try to go short, or they've got more stock to unload, we won't know till we get up there and see how the market reacts. But as we sit right here and now, we've just got the same sort of setup that we had with URA. Okay, it's the same thing. Look where the 50 lies. Look where all the structure lies. Maybe we get a little bit deeper down to there, but that's just generally your point of call. And it's not really a problem for the market to come down as it's doing and just test into this if we want to see it keep going. Okay, no drama at all. And so there's not really much else to say or do here. I mean, like I said, this one, the pivots haven't painted quite the same way. I think this is going to end up being a larger pivot. So we'll just have to wait and see how the indicator deals with this. But you basically, you've got a longer upswing than the last one. It's the same deal, right? You've got an extended run after a run, a pullback, and now a run that's gone external. It's just a trend. Okay, so we are still within this trend. So the idea of the trading range can still play out. I'm not saying it won't, but I'm just saying that to me it feels less likely because of what happened last Friday across the space. Okay, so it remains a possibility, but the odds have probably shifted. That's pretty much all I'd say about that. I mean, otherwise, yeah, it's pretty straightforward for me. That's just all you're looking for. Just jumping across here to CCJ, and this one's a bit different. So this probably maybe throws into light the validity of some of those sort of seasonal statistics I was throwing up. But maybe CCJ is the better one because it's got the history, right? It's the longest running. So unusually, May is actually a good month for CCJ, but June is a shit one. So we are definitely, I think, like I said, what you can draw from that is we are definitely at a period of the year where historically the market has struggled, okay? Be it May, June, or July, and it makes sense, right? Summer. Maybe not as much power being used for whatever reason. It's just, that just has tended to be what's happened, okay? So we just do have to keep our expectations a bit anchored because we know we're coming into the shit season basically for the advance of stocks. Doesn't mean it can't happen, of course. I mean, there's statistical aberrations all the time, but all it means is we just go, okay, there's a few things, there's a few markers coming up here where we've probably just got to consider a few things. So let's just look at how the price structure is swinging as we get towards this historically weaker time for the market. Now, as we know, CCJ is held up much better. Okay, it looks super constructive. Okay, so I've just marked off here. This is the all-time high, around about that $56 mark. So as I'm looking at this, I'm sort of thinking, okay, well, you can see pretty obviously we've got the genesis of a good trend here. It's not really an awesome trend channel, I would say, just yet, but we've got two swing points here that we can sort of draw a line off for reference. That's all I'd say. That's just a line of reference at the moment. I wouldn't consider it a full-blown trend yet. Well, I mean, look, it is because we've got a higher low, and we've got a higher high. So it is a trend. I mean, at the very basic genesis of it, that's a trend. So what I found very interesting here, and it all sort of ties into this sort of $56 area as we just sort of creep towards that level. When we get there, I think we will. When? I wish I knew. But this is what I just look at with this one, right? So here's the first retracement down back into the zone, okay, and that we've got the measured move target is up here at 55.77. Okay, so that is closing in on that old peak. And when I say that old peak, I mean this is back on a monthly. We're talking about this one, right? So it's a reasonably significant area is what I would say. So let's just fix this up again. So what I'm looking at here, okay, so we've got a measured move target there, right? So but within this, there's another move here. So as I bring in to this pivot, okay, we touched the 50 and we went straight to it. Okay, straight to that measured move there. Okay, so there was a little internal measured move, and that one was okay. It didn't actually hit it. Okay, that's 54.99, and the high here was what's that? 54.93. So you'll have to let me off the 6 cents. But you get the point, right? So that sort of swung up there. So we swung up, we retraced down 50%, and we swung up to hit the target. So what do? We just go on to the next one. And what's the market doing at the moment? Okay. Well, so far, and this is quite small, but it is there. We'll come down to a 4 hour. You can see it a little bit better, right? The market came down here. Oh, it's an old. We'll get rid of those old lines there. It's come down here, touch the 61.8. Where's the next? So I think, like I said, that just to me gives some confluence up there. Okay, so I look at this and go, okay, well, I know I've got a pretty broad band in there of a few things overlapping that I would expect that if the market, if and when it gets up there, I can expect a combination of the level, the all-time high. The market's going to be volatile up here, right? Because people are going to try to push it to make new all-time highs, but you've also got this measured move target sitting in there. So this would definitely be an area to pay attention to. I mean, that goes without saying, but you can see how the structure goes together, that there's a few things overlapping that if you weren't really aware of them, they could catch you out. Okay, so this one's giving us a bit more of a trend, I think. Whether or not we can channel that, let's try together. Not as good, but I think definitely that the trend line off the bottom is looking a little bit cleaner now. You've got multiple touches, so we shall see what happens next week. But so far, that looks like the primary play right now is looking for this. Okay, so will we hit the all-time highs next week? Well, I think the point is, when I go back to that seasonality, is like, well, if we do manage to hit those all-time highs in the next week or two, does that mean that we might be in for a larger retrace? That's what I would think, because there's reasons for the market to run out of gas there. So when I say a larger retrace, I would probably be thinking about this pivot. I don't know if I'd be thinking as low as that now. I'd be thinking more about this pivot, okay? And let's say, for argument's sake, they ran the stops, got a false breakout, caught the breakout traders up here, caught them long. Would we then be thinking about, okay, over June, July, coming into August, are we then going to get our retracement, our retest before possibly moving on further? That would be how I'd view it at this stage. But right now, we've got, like I said, I think you've just got to keep it simple. Okay, big trend. Okay, that's the bigger trend, and within that big trend, we've got that smaller trend of measured moves going on. So that's just what I'd be keeping my eye on for the next week or two. So look, that's it for this week. I hope you had a good week this week and have a great one next month. Thanks for watching. Don't forget to hit like and subscribe, and I'll see you next time. Bye for now.